Ladies and gentlemen of the crypto space, we're live on a Friday, February 25th at 11:19 a.m. And there's so much going on, especially from the macro perspective. And there's so much going on literally in the microcosm of the crypto space. And we have all these emotions going on, all these choices and decisions and considerations. It's enough to drive people literally mad. And the worst thing that happens in a time like this is when folks are like, "What do I do? Do I do this? How do I do this?" And not considering the compounding effect of capital loss on how bad a situation can get. I mean, there's literally so much risk in these markets right now for countless reasons. It's just a bear market. If you see a rally in any of the macro assets, there is a greater likelihood than less it's going to be sold. It's going to be faded. There's fear that's pervasive. There's war occurring on with some of the biggest countries on the planet. The whole world is involved at this point. They're not at war. We don't have a global world war, but they're literally all going crazy at the governmental level, trying to figure out what the heck they're going to do. This is a macroeconomic storm, and folks are operating in financial markets like it's not. Now, clearly, there's always a capacity to reap financial benefits. Buy low, sell high. That's the bottom line. Everyone knows that, but there's so much nuance that goes into a capital gains play. It's not just technicals. You really have to dig into the psychology of people playing in these markets, and they're going to be predatorial. And that's exactly why bear market rallies are the most ferocious. And they get sold because people have capitalized on people speculating that there's going to be some sort of continuation. Everything's going to stabilize and it's going to be okay. This is the nature of a bear market. As we've seen it time and time again throughout history, and most recently 2018 and 2019 in the crypto space, which aligns extraordinarily closely with how the Fed was treating their balance sheet back in 18. They were rolling it off, and then the big pivot at the end of 18, and that carried through all of 2019 of horrible bearish market conditions in the crypto space. And then, lo and behold, 2020, they juiced the market. So we know that the crypto space has correlation with equity markets. We know that it's all respectful of monetary policy conditions. And what we have right now is monetary policy tightening. And we know historically how these markets respond in this kind of macro financial condition, these kinds of monetary policy conditions. With that said, Solidly launched. With that said, Solidex launched. And I bring up this topic because I know people are running around like chickens without heads. What do I do? How do I get part of 3,000% APYs? And it's a lot. Iron Bank is cranking out 3,800% on. So these are big numbers, and what you're exposing yourself to is immense risk of the volatility of the underlying assets. I'm not going to argue that it's tempting to be exposed to impermanent loss minimized positions like derivative spirit, rain spirit, and spirit is 7,000%. So there's no impermanent loss because they're equally priced assets in many regards. For instance, Xtarot, Tarot, Block Tarot, the Beats. Where's Beats? That's doing well in the charts. So these are interesting, but you still have to have a risk consideration for the nature of the prevailing market. So you do look at technicals. I'm currently not exposed to any volatile assets. I don't trust these markets, but this is a heck of a chart for Beats. Um, so we know Beethoven and what they're doing, how their monetary policy works. It has the bribery component, has the incentive systems, and that's pretty interesting. We know that's successful historically, so this is a risk play. There's absolutely no reason if the market gets bearish enough that everything sells no matter what. But this is obviously exhibiting a bullish trend formation in not just the short term, the moderate term. For the last 3 months at this point, this is an ascending triangle in almost all regards. Um, Folks will make their own decisions, take on the amount of risk they want to take on. To top it all off, you have this very bullish trend formation combined with, where's Beats? 2,000% returns. Now, what's interesting and what needs to be known about the returns, or they're denominated in sex and solid. So that's all. You could just hear legacy financial folks and, like, veteran economic folks hearing these asset names, and it'll drive them mad. So sex has good liquidity. So if you go over here, there's good liquidity for sex. You go over to good liquidity for sex. Incredible. Great liquidity for sex in the markets nowadays. So let's zoom in and let's take a peek and see how that's doing. Sorry, give me a second. So it's decent liquidity. Now, bear in mind, it's a brand new asset. It's hyper inflationary, but it's also disinflationary because the amount of sex that's emitted is a factor of of solid emissions. So we expect solid emissions to go down as more and more solid is locked on the Solidly platform. So that's interesting. The tokenomics are good. So when it comes to the amount of yields that are available, this is the risk profile. Who are the developers? They're anonymous. We have no idea who the heck they are. Their code has not been audited yet. Their code is to some degree public. So right now it's under scrutiny by obviously all the other 25 platforms that are involved with this protocol at a federation level. Um, it's immutable. They had an issue with voting, and it's not a horrible issue. It's just a persistent bug that can be worked around and managed. But the contracts are immutable, which means they cannot be upgraded, which means minimizes capacity for malicious activity, which is nice to see. I took a look at some of the contracts with my limited exposure. I'm in no position to give a definitive assessment of their strengths and weaknesses or potential vulnerabilities. That's what the professional audits are for. So exposing yourself to these protocols carries risk. I myself am exposed in a dollar stablecoin type of play. I don't want to expose myself to the volatility of the underlying assets. I often say to folks that you can't own everything you want to own. So, I see this chart and I'm tempted. It's very tempting. It's got to tempt anyone. It would tempt anyone that plays traditional markets, traditional financial markets. This is a bullish trend formation. A good entry or a long support. You get one more rip down, so there's two hits on resistance, one, two, three hits on support, more or less. One more rip down, and then you get a breakout above 109. Some people like to wait for the breakout above the resistance. Some people like to buy on support, and that obviously has an increased risk profile as compared to waiting for like $1.12 for the break of the resistance. And these are how you play capital gains. And just because we have a macro financial shit show doesn't mean you can't play the capital gains approach to markets. But there's always a chance that it doesn't go in the direction you want. The narrative is invalidated. This was all a controlled, run the tape manipulation. I don't know. You only know in hindsight, and that's the complexity with all capital markets. What do I know about Beats? I like the aesthetic presentation, the branding, um, the tokenomics. Thus far, uh, Beethoven has proven interesting. Is there other things that are more interesting? Probably. Oh my God, I don't have my screen on this entire time. I'm really sorry, guys. I do that all the time. All right, so Beats looks. Oh my God, I'm not going to recap everything I said. This is the Beats chart. It looks quite interesting from a technical perspective. Ascending triangle, three hits on support, looking for a second hit on resistance, and maybe we get one more dip down to support, and maybe a breakout above resistance, and it fails. Just everything I said. I didn't have the damn screen on. That's really annoying. Sorry, guys. All right, so but here's an interesting one. Let's go back to sex. I didn't show you that. Now we got to zoom in again. Damn, I wasted almost 8 minutes. Me and my ramblings. Let's zoom in. So there's good liquidity on SEX and FTM, which means you could exit. Where this chart heads, we have no idea. The emissions are very large, as you guys can see. Beats is to 2100 and change, And so if you go over to pools, we clear this. So it's cranking out a lot of yield. And it's not selling, which is interesting because there's good liquidity for sex, which there's more buyers than sellers. And that's because of the capacity to lock and vote and all the nuances that we know from the curve convex relationship. There's a lot of risk here. There's also a lot of potential. We understand, as I discussed, we don't know who the devs are, the contracts aren't audited, but what is the potential for the protocol to be? There's the potential to be a curve convex type of synergy. And now there's a federation of 25 protocols involved. So I've talked about all the exciting things, but I also need to remind everyone of the extreme risks in this macroeconomic climate. You're talking about $1.5 billion of TVL in a day or so. So there's a fair amount of trust going on. Look at the pools have almost $1 billion worth of cash. 6, 7, 8, 9. Yeah, $1 billion worth of cash right about now, cranking out 50% for each of the pools respectively. So this thing is just a money printer. I'm not going to argue with that. Um, so what else is there? There's multi has been hammered. We've talked about multi in excess. Let's go over to any and you can see the chart better. Yeah. So there's a lot of yield for the. I don't think there's any yield yet for look at that bullishness. So don't get caught up. Don't get caught in a bull trap, but you want to be exposed. So this is a classic case of risk management. This is a classic case of sizing your positions correctly. If you're prepared for downside, if you expect downside and bullishness happens, that's great. This is exactly why I've historically told people 1% of the portfolio turning to 10% of the portfolio changes everything. And if you're in of overall bullish macro environment, so you can expose yourself to more risk, 2, 3, 4, 5% of the portfolio turning into 50% of the portfolio, that really does change everything. So there's two assets. What else? Let's look at Iron Bank real quick. They're all ripping. They all have bullish overtones in a technical way. So this has recovered past this green line, which I've highlighted as a historic resistance. Had overtones of a cup and handle, but that look at that. See, this is exactly what I'm talking about, folks. You can't trust shit, and if you trust it, things go in the opposite direction. Come on, that you can imagine if you didn't see this portion of the chart. You saw a giant cup and handle. Oh my God, if it breaks above the $253 mark, this thing's going to go up into the moon. And that's what everyone talks about. And lo and behold, it just dumped the shit out of it. So that was a complete invalidation of the chart pattern. You have no idea what's going to play out. And then if you go back over to beats, we see this incredible ascending triangle formation. It looks gorgeous narrative from here to the top of a mountain of how awesome the tokenomics are. Great. But when you have a breakdown below support, it's not going to be pretty. Size the positions correctly. That's imperative. Dan's in the house, Grumpy Miner, Chronos, Epoch, Manjot? Howdy. Dildo Schwaggins is in the house. Iran, hey there, ready for a VE multi. I'm looking forward to VE multi. I don't see the tokenomics as as robust as Beats, as robust as Solid, and even Sex at this point. Solidex's governance asset. Bribery. What we've seen thus far in the entire crypto space is that the bribery, the capacity for persons to pay for gauge allocation weighting, has shown to be a massive creator of stickiness, or a creator of massive stickiness, and that's pretty obvious. I mean, look at the curve convex relationship. The price points on curve and convex again are hit pretty hard, but they're overall strong. If you look at curve, holding supports, and if you pull out to the monthly, you see what I've always looked at. It's nice to see this big wick, but I still have a base case of a large ABC correction, especially if we get hit at the macro level, like $1. It'd be nice to see this hold a previous support That would be a very big support, and that'd also be a very big correction. But take a look. The C wave would be much larger, meaningfully larger than the A wave, and that would be consistent, especially with this fractal that has mostly degrees of commonality, especially with hitting resistance and falling back below. So it didn't even get to the 50 SMA or the TWEP on the weekly, and it fell below the 200 SMA on the weekly, which it didn't do. But, oh, I guess maybe this is where it is, right about here. So that's maybe the 200 SMA. So it got rejected by the 200 SMA and is clearly rejected by the TWEP, which is above head. This is a bearish condition. Um, this could go on for another couple of weeks. If look how many weeks this went on: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks until it broke above the 200 SMA, and we're only whoa, 1, 2, 3, 4, 5, 6. Another month and a half, we could have these bearish conditions if this fractal holds up, and that's clearly not an expectation. And we can't have expectations of time for things to play out. So that's my sentiment there. Don't trust. I don't trust a lot of what's going on. Let's take a look at convex for a second, of which you guys know I have a decent sized position. It's nice to see it find support above these bottom green bars because this is a historic resistance. If you see right here, that's cool. That's good to see. It's funny how price points line up meaningfully at times. And this was a historic support. So it found support on a historic resistance, pushed back above a historic support, and still sitting under the 200 EMA and the 200 SMA in the daily. We have a bearish cross of the 50 SMA and the 100 SMA, so we don't have a death cross yet. It would be a 50 SMA cross of the 200 SMA. You'd have to go to a shorter time frame. Let's go to the weekly. We don't have moving averages printed yet. It's too new of an asset, but we're below the TWAP. Still above the guppies. You can still see the price action support and resistances that I drew in the shorter time frames. So we'll see. We don't have meaningful stochastics really. It's too new of an asset. Let's go back to the daily and look at the stochastics. The oscillators. We're towards the bottom end of RSI, which is interesting. Uh, it's not maybe if the MACD pulls around, you get a little bit of a bullish divergence there because you don't have a bullish divergence on the RSI, but you are towards the bottom end of the spectrum, which is good to see. Maybe it loses bearish pressure. Sellers may become exhausted around this region, and then that's when you get a bear market rally, and you rip straight up to the 200 SMA on the daily, and you get rejected, and that's no fun. Well, this is the 50 SMA. We're already at the 200 SMA. If you notice, look, 200 SMA is right here, and this is an inverted hammer coming off a relatively large hammer, so you need another couple of days for confirmation, potentially a directionality reversal. So this is a decent indication of a potential bottoming structure. As you can see here, bottoms have very large wicks to the downside. It's quite possible. Literally, all you need is one bad headline. If the U.S. shuts down SWIFT on Russia, the energy is going to stop flowing to Europe, and it's going to literally have fallout everywhere. So you got to understand, it's not just technicals, boys and girls. You got risks at the macro level. Oil prices going to $10, gas prices going to $10 at the gas pump changes everything. So there's your big risks. And most folks looking at crypto charts are not thinking about the risks of gas prices, or what happens if mortgage rates jump to 5%, 6%. If they bump the Fed funds rate to 50 basis points, it's going to turn the entire risk asset space into a free fall probably, because everyone's betting you're going to get a 25 basis point bump. So bear in mind also, if you get no bump in March on the FFR, the Fed funds rate, maybe that shoots all assets completely vertical and invalidates the entire bearish narrative. Joe, I don't understand how Solidly works. Are there farm rewards? Or do you earn exclusively trading fees? How do you know what the projected APR is? So Solidly UI just launched. It doesn't have any of that information yet. So these are LP positions. You really should look into VE33 tokenomics to understand why the monetary policy is significantly iterative. based on historic experience from the curve-convex relationship, as well as Olympus Dow for that matter. But also has a great deal of respect for the basics of monetary policy, inflation and deflationary pressures. The inversely proportional relationship between emissions and the lock rate is probably one of the biggest things that I see. That's a big deal. So that's quite interesting. So I have a high opinion of the Solidly platform. Now, that's where you take a 1% play. Take a 1% play in Solid, but here's the problem. Here's a big problem. There's zero liquidity for Solid. All right, fine, it's going up. You got 350K of liquidity on Spooky. You have nothing on Solidly, 69K. You're going to get horrible slippage. And this isn't liquidity. There's no liquidity for Solid. Enter or exit liquidity, 350K. You're going to have horrible slippage with even a moderate sized position. There's decent liquidity for SACs, which is I showed you guys, but let's take a peek. 22 mil. So what does that mean? That means if you're getting yield, your SEX is liquid, you could liquidate for stablecoins. Your Solid is mostly illiquid, but Solid is yielding 9,000%. Holy crap. So I have a position of Solid, which I locked into Solid SEX. Solid SEX. Oh my God. The memes on this shit are just borderline, borderline cringe, but I've always said I peer through the insanity, peer through the insanity. And that's how I'm able to justify with my rigorous way I look at markets, the rigorous way I manage risk, and the rigorous way I dig into and respect macro financials. I'm able to peer through this insane presentation of memes and branding and see potential legitimacy. Now, that doesn't eliminate risk. Risks are all the risks I've discussed, but this thing's printing? Come on. It's printing 18.9 secs in a day, and I could sell that for synthetic dollars. That's something I can't ignore. But I have to manage the risk with an appropriate size position for myself. This is a small position, as you guys can imagine. And that's what I did. Everything else I have is stables, aside from the other components of the portfolio, which I discuss on Discord. Everyone knows. Everyone knows exactly what I'm doing, how I'm doing it, why I'm doing it. Full transparency there. I mean, how am I going to ignore this on Solid, a wrap version of Solid that has an analogy to CVX CRV? So this is the analogous CVX CRV position, and SEX is the analogous CVX position. I mean, I see the analogy. So I am in that's my conversation. That's my complexity. Trying to manage risk while also peering through this damn insane presentation and seeing the tokenomics for what they are and the analogy for successful systems. That's not easy, boys and girls. This isn't some shit where you just ape your money in. Ooh. So we can do better. We can do better, boys and girls. 57 people in the stream, 19 likes. We can do better. Beats market, not bear market. Kronos, possibly the case. We looked at the chart. I appreciate what you're seeing as well. Hassoon's in the house. Dan, charts back up, obviously. You said that a while ago. Stacking, how do you feel about the obvious degradation of Phantom Network? Well, it's not degradation. It's just gas prices going up. So you put your gas fees on 3,000 to 5,000. You're going to get a transaction through in an expected period of time. How do you think Ethereum manages high transaction fees? Is exactly why gas fees have gone up. So that's how you manage volume, by making people pay for performance. So there's literally no problem at all thus far. I've heard of no systemic instability with the platform. It's just, you'll see a lot of complaining of persons on social media. Phantom doesn't work. No, you just don't understand gas, and you're engaging with a market that you don't fully understand. Throw 3 to 5,000 on gas, and you're going to get a transaction through relatively painlessly. Where are you finding APY APR for Solidly? I go off of Solidex, and that's that. It's not really buggy. It's actually pretty good, aside from loading of I mean, look, so sometimes these fail to load, and that's okay. This is a user interface. It's not the smart contracts, and this is dependent on RPC. So it works very well in my experience. Folks literally don't know about this little toggle right here. So drop the toggle. If you see nothing, it's because you've literally selected My Deposits. Uncheck My Deposits, and you will see all the pools. It's pretty straightforward. So it works well. I don't see any fundamental problems with its behavior. I see nuances and things that I would improve, like I don't like auto retry functionality. I'm fundamentally against it in how I code software. But error states and state display are mission critical. Loading states mission critical. Kingsley, I took a position on USDC SYN on Solidly. Okay, be careful. It's a volatile asset, and we don't know how it's going to perform. Let's take a look at Synapse. Let's take a look, give you some insight. Everything's ripping in these markets right about now. All right, that's cool. Big bounces off the bottom, 270 from a buck and a buck 80. You could have made some good money off this. What kind of liquidity? Um, 24 mil worth of liquidity. You could have made some good money off this. Big bottom bounces on all these assets that are involved with these protocols because there's big incentives, and the incentives are driving deep liquidity. As you can see, 54, 50 mil, 60 mil, 70 mil, $1 billion in stable coins. So that's big. Here, look, here's your 32 mil in, on Solidly for just Synapse. That's awesome. So this is exactly what Curve and Convex did. They drove deep liquidity, and they did it in a way that their tokenomics weren't hyperinflationary. I mean, obviously, Curve's hyperinflationary, but Convex makes it disinflationary, if not deflationary. So in this instance, we have that analogy at play, but we have psychological factors and incentive systems that create stickiness. And the V33 tokenomics is like a curve, but not hyperinflationary. So there's some potentially novel uh, capital flow dynamics that'll play out. But it's certainly doing its part in driving the liquidity. And the fact that SEX is appreciating back to $27 is extraordinary. Had a big sell off earlier. Can you share the screen? I fixed that. Um, I fixed all this stuff for you guys. Let me give you some more answers to questions. Yeah, Mark, that's right. I'm seeing the yields on the Solidex screen. Needs to stay about 40,000 and test at least once for me to turn bullish. What, Bitcoin? We could take a look at Bitcoin for a second. Let's take a look. Crude oil. This is a big breakout. BTC USD. Let's take a look. So here's the problem. Folks will say these don't look different. And I don't care about price action. I don't care about up and down in price. What I care about is the fact that it just got rejected from the monthly TWAP. It got rejected from the monthly TWAP. We're this right now, we're in a period where the Fed is tightening and starting to think about raising rates and what the hell they're going to do with their balance sheet. This is where we were in 2018. So people say when I say we're in 2018, no, I don't mean that with regard to price. We were $7,000 in 2018. We're at 40 grand. I don't mean anything about price. I mean the macro conditions. We're below the TWAP. It got rejected from the TWAP. The Fed is talking about rate hikes and tapering. That's exactly the same conditions we were in 2018. So look at this. The same exact chart setup as in 2018, not the price. I find that very interesting. And folks literally look at this chart and all they look at is price, but I'm looking at the entire global financial system as well as the United States monetary policy. Hilda's in the house, a pleasure. Louis, my friend, hope everything's good. Tough times. Thoughts on catalog and Ren? Very interesting. You guys know how I'm exposed to the Ren ecosystem. Vaku, Captain, opinion on beats. I showed you the beats chart. Very nice. Technical improvement behind Urine Boost Stables LP and not accounted for by the market. Well, then you're giving that, oh, it's undervalued opinion. In the end, it has a very bullish technicals. is the tokenomics enough to overcome macroeconomic craziness? Well, thus far, yes. I think macro could get crazy enough to completely override any technical bullishness. So you always have to be respectful of the macroeconomic climate. So just be careful. Watch the position sizes, manage your risk. And someone mentioned to me on Twitter, I'm 50% on stables. I'm so bearish. Yeah, I'm making 46% on my stable coins. That's fascinating. I mean, who the hell is going to complain about $3,000 a day on stable coins? I don't need to get 50% on the money. I don't need to be exposed to an insanely volatile chart like that, albeit it looks good. It's nice to see a massive bounce like this. So that's just folks not playing their own hand. I mean, it's a 43% rip to the upside. If I got 43% on $1 million in 24 hours, that'd be pretty damn cool. So, but I don't want to play that. I have no interest in playing that. I have no interest in gambling. I have no interest in that uncertainty, of that anxiety. I want to sit here. I got to do things over there. I got to take care of this, handle social media, and do what I do and enjoy my day. I don't need to be sit here nail biting with anxiety that I could potentially lose a fair amount of my capital if I got the directionality of the market wrong. And that's what it is. Playing these markets has uh, a good amount of gambling involved. Dylan, good morning. Jacob, playing solid and beads. Love my FTM. Solid is a nice, it's about a 0.5% or a 1/4% for me of the portfolio. So that's cool. And beats has been showing technical strength for the last 3 months, which is pretty cool. Thelio's in the house. Lewis, you'll get one out in a second. Menace, study curve wars, and you understand solidly. That is a true statement, as long as it plays out as expected. If this thing plays out as expected, yeah, you'll want to understand the dynamics at play there. This is the best thing about crypto, keeps away TradFi bros. Yeah, because this is complicated stuff. We're talking about monetary policy. A lot of folks are like, how do you know what to invest in? When they ask me what I do in these markets, and it's tokenomics and monetary policy, and I tell them you got to think like central bankers. You got to do due diligence into who the developers are of a protocol. You got to assess the risk of the smart contracts. Has there been third-party audits? Maybe you take a peek at the contracts yourself. Um, and that's it. Big social media presence, marketing, community, and most recently, federation. And I guess that's above and beyond tokenomics. This whole federation of organization of protocols is a big deal. We haven't seen a federation this large yet in the crypto space. Steelers Nation, just a tip: swapping Solid to Solidex is much cheaper on Solidly versus doing it on Solidex. Oh, okay. Yeah, well, it's not cheaper. It's that you get a bonus because of the slippage. So that makes sense. But I don't understand why folks are swapping SolidX for Solid. There's no, there's no liquidity for Solid. You can't do anything with it other than, well, maybe that's actually a good thing. You can't do anything with it other than lock in an NFT for purposes, exactly the purpose of Solidly, to direct emissions. That's so. This is very interesting how this is going to play out. There's plenty of ways I see this as solid becoming a very scarce asset, very limited in supply. If all solid goes to locking, it's going to be very illiquid, and the returns on LP positions are going to be very high, but not because of quantity, just because of price point. And I look forward to looking back with hindsight and seeing how all this plays out. This is the best thing about crypto. Yep. Harshal, will this congestion clear in a week on FTM? Maybe. Uh, just throw in 3 to 5 thousand on gas and you're good to go. Did I have a birthday cake? I had a birthday cake. My wife was very sweet yesterday, much sweeter than I am on holidays. And I promised myself yesterday that I would do better because this is a wonderful woman that always pushes me in the right direction. Best thing about my wife. I always say that I don't have many things that push me in the right direction, and she sure as heck does. What's your strategy with rewards on Solidex? I don't know. I haven't taken any yet. I think they're going to be kicked out of the SWIFT network. Oh my God, do you know what happens there? Then Russia cuts off European energy flow, and then everything collapses. If they don't have energy, do you know what the price of energy will be? I don't think everything collapses. If you had $20 a gallon for gas in the United States, the system collapses. So this whole system is just so you have to understand macro because otherwise you're deploying capital in these crypto markets and the whole system could be in the process of falling apart. Menace, which I handled that. Yeah, what's your strategy with the rewards from Solidex? I handled that. Any thoughts on near ecosystem and uncoupling incentives? That's off my radar. But I find all the secondary L1s very interesting. Mostly interested in Cosmos networks, Cosmos hubs, Polkadot parachains, and I get a kick out of Astar. And Moonbeam is cool. And the Cosmos hubs and Osmosis is just fire opportunity left and right. Um, if your bag is not too large, you can trade it for WFTM and Spooky. Yeah, 6% slippage. So that's right. So here's your slippage. Here's the amount of liquidity. There's only like 300 grand worth of liquidity, $340,000 worth of liquidity. Not going to be able to sell a lot. You can sell like 5 grand here and there. That's about it. Harshal solid beats LP on 6K just for swapping, not beats rewards. Very interesting. Very interesting. One curious view, exactly market underestimate the situation right now. Yeah, if you're throwing around capital in these markets, everything that went up could literally go down vertically if there's one macroeconomic explosion of any kind. And that's exactly what has happened. And that's what and now with war going on, it has even more of the potential to occur. And we're not just talking about rate hikes and balance sheet and tapering and stuff that we've been talking about domestically. Now we have an international complexity on our hands. So, for the love of God, everyone, please play risk accordingly. Size your positions well, 0.5%, 1%, and just be careful because these markets will take your money like a predator and they won't think twice about it. And that's exactly what a capital market is. It's Darwin, it's survival of the fittest. And if you could sell for cash, the odds are you're winning. If you're accumulating cash, the odds are you're winning. And then you could buy more Bitcoin if it goes to $20,000. And that's awesome. So there's a variety of things to think about. And capital gains are meaningful. And portfolio construction is meaningful, and it all is a risk management strategy and a matter of due diligence to know what you're exposing yourself to. So be careful out there, folks. I thank everyone for joining today. I hope this helps. Friday, February 25th at 11:57 a.m. Got done a couple of minutes early. Tell everyone to subscribe. You head over to noahseidman.com if you have any questions and you want some help with risk management. You want to talk about maybe macroeconomic situation. I'm more than happy to clarify. Um, if you want to restructure the portfolio, if you want to take less risk, you want to expose yourself to a certain degree of risk, a certain asset, maybe you're interested in something and you're like, oh, maybe I should, maybe I shouldn't deploy capital to it. And more than happy to discuss anything that's on your mind and help out the best I can. I wish you all a wonderful day. After party on Discord, you know the deal, the most rational community in the entire crypto space. I'll see you again on Monday. You have a safe weekend now. Peace.